Press the bell icon on the YouTube app and never miss another update.
Friends, welcome to another video on your channel Profit in Equities. Now, if you like our content, please don't forget to hit the like button. Also, click on the bell button to receive important financial updates faster than anybody else. Now, a lot of stocks in the market currently have undergone corrections in the small and mid cap space. So it is a pertinent time when we could bring to you a laundry list of stocks which you could keep as your watch list for acquisition when there is bloodbath on the street. So that is what we are intending to do over the last few days, where we are giving you a laundry list, a lot of stocks, and you can go ahead and analyze them and take your own decisions whether any of these stocks meet your investment criterion. So today we would be talking about 4 stocks which Share India Securities believes could turn out to be multi-baggers in the years ahead. Now, Share India Securities is a brokerage firm from India. Also, if you think that you have any queries with respect to this content, please don't hesitate to go ahead and comment in the section below, and we would be trying our best to go ahead and answer your queries. Please watch this video to know more about this particular set of stocks. Now, the first stock on the list is Raju Engineers Limited, which is available at rupees 50.35. Now, the code for the company is RAJOOENG. Now, Raju Engineers Limited is engaged in the manufacturing and selling of plastic processing machineries and post-extrusion equipment. The company's principal products include thermoplastic extrusion plants and miscellaneous parts and equipments. The company manufactures extrusion and post-extrusion machines for producing films, sheets, and various thermoformed and vacuum-formed products. Now, if you were to look at the one-year chart, you would see that the company was performing consistently for the major part of the year, but of late there has been a major spike in the stock prices of the company. This just indicates that there has been some kind of major interest recently. Now, the market cap of the company is 309.81 crores, which means that the company is still a small cap one. The EPS is rupees 1, which translates into a price to earnings ratio of 50.35, which is very expensive. Also, this is also comparatively expensive when seen in relation to its industry PE, which is 34.89. The book value is 6.79, which translates into an expensive price to book ratio of 7.42. The debt to equity is 0.0820, whereas the return on equity is 0.1554. Now, the company pays out a dividend yield of 50.50, and if you were to look at the 52-week low for the company, it stands at 15 rupees, whereas the 52-week high for the company stands at a figure of 62.50. Now, the reason why Share India Securities thinks that this could be an outperformer going forward are: Raju Engineers supplies machinery for packaging products and is bound to gain with strong consumption demand and with an uptick in FMCG sales. Currently, this stock is trading at higher multiples with respect to trading multiples. However, the brokerage is confident that strong sales and higher profitability due to its positioning in the industry is going to go ahead and make it an outperformer. Also, they believe that this company has maintained strong return ratios and will continue to do so in the future. And these all reasons combined make them feel that this company would turn out to be an outperformer and a multi-bagger over the next few years. Now, the second stock on the list is GREAVESCOT Limited, which is available at rupees 137.25. Now, the code for this company is GREAVESCOT. Now, GREAVESCOT Limited is a holding company which is engaged in manufacturing of engines and engine applications, manufacturing and trading of agro products, trading of spares related to engines, and construction equipment. The company's segments include engines, infrastructure equipment, and others. Now, if you were to look at this one-year chart for this particular company, you would see that the stock was on a downtrend for the major part of the year, but of late there has been a major spurt in the stock price. The market cap of the company is 3351.74 crores, which makes the company a mid-cap one. The EPS is 7.42, which translates into a price to earnings ratio of 18.50, which seems very cheap compared to the industry PE of 31.97. Also, the book value here is 37.71, which translates into a reasonable price to book ratio of 3.64. Now, one very important factor about this particular company is that this company has a very good dividend yield at 4.01%. The promoter holding here is average at 51. Now, if you were to look at the 52-week low for the company, it stands at 112.35, whereas the 52-week high for the company stands at 178.55. Now, if we were to look at the reasons why Share India Securities thinks that this could be an outperformer and a multi-bagger going forward, the reasons are: GREAVESCOT has tied up with Piaggio to supply BS6 diesel and alternative fuel engines. Now, policy embargo on commercial vehicles and environmental concerns from National Green Tribunal makes them confident on prospects of the company. Also, GREAVESCOT drives a significant portion of its revenue from agri-equipment and construction equipment. This makes the company uniquely positioned to gain from all quarters of government policies. Strong return ratios makes the brokerage confident on the management's capabilities to deliver going ahead. Now, the third company on the list is Hindustan Oil Exploration Company Limited, which is available at Rs 132.10. The code for the company is HINDOILEXP. Now, Hindustan Oil Exploration Company Limited, HOEC, is an oil and gas company. The company's activities relates to exploration and production of hydrocarbons, which are natural resources. The segments include hydrocarbon and oil additives. Its products include crude oil and natural gas. Now, if you were to look at the one-year chart for the company, you would see that the company was literally consolidating for about half of the year, but since then has been on a strong uptrend. The market cap of the company is 1723.82 crores, which means that the company is a small cap one. The EPS is 1.73, which translates into a price to earnings ratio of 76.36, which appears very expensive. Now, this is also very expensive compared to the industry PE of 15.54. The book value of the company is 25.39, which translates into a price to book ratio of 5.20, which again is expensive. The dividend yield is 0. Now, the promoter holding here has been mentioned as 0, and we need to look more into it. Now, the 52-week high for the company stands at 153.35, whereas the 52-week low for the company stands at 65.55. Now, one important factor to note here is a lot of big names have investments as far as this company is concerned. So, there could be some important fundamental aspects which are associated with this company so as to warrant investment by these marquee names. Now, the reasons why Share India Securities thinks that this could be an outperformer going forward are: this was the first oil and gas company in the private sector with professional board, debt-free balance sheet and proven development operating experience, putting this company in a sweet spot with rising crude prices and gas demand in India. So, even though the financials do not reflect such a very rosy picture in terms of the PE ratios and other such comparative measures, but with the rising price of crude and gas demand, this company is expected to do well going forward. Also, the company is planning to ramp up production capacity and raise capital for inorganic growth and also acquire additional acreage. Now, open acreage licensing program and discovered small field bid round 2 announced by the government presents excellent opportunities for this company to grow their portfolio. Now, the final company on the list is FLEXFo Limited, which is available at 141.20. Now, FLEXFo Limited is engaged primarily in the business of cultivation and processing of mushrooms, herbs, fruits and vegetables in freeze-dried, air-dried and individually quick frozen form. The company sells its products mainly to the European and the United States markets. Now, the code for the company is FLEXFO And if you were to look at the 1-year chart, this is again reflective of a scenario where the stock price was on a consolidation mode for the major part of the year, but of late there has been a huge spurt in the prices of the company. The market cap of the company is 175.79 crores, which means that the company is still a micro cap one. The EPS is 6.66, which translates into a price to earnings ratio of 21.20. Now this is much cheaper compared to the industry PE of 66.90. The book value is 61.13, which again presents a stable price to book ratio and probably an inexpensive one at that, at 2.31. The debt to equity is 0.4264, whereas the return on equity is 0.1046. Now the company also has a good dividend yield percent at 1.77. The promoter holding here is average at 59.68. Now if you were to look at the 52-week low for the company, it stands at 88, whereas the 52-week high for the stock stands at 169.15. Now as far as Share India Securities is concerned, they believe that Flex Foods is an associate company of UFlex and a leader in flexible packaging technology. Now Flex Foods cultivates and processes food products and supplies vacuum freeze dried, air dried, frozen and an individually quick frozen product range. It sources its raw materials through contract farming through a dedicated network of 500 farmers, and with the strong pedigree, good product range and low forward earning multiples makes the brokerage confident of a better outlook for this stock. Now friends, these points put forward were the brokerage's own thought processes. Please don't treat these as stock recommendations on our part. Please go ahead and do your own research and consult your financial advisor prior to acting on any of the information that you ever see on this channel. Thanks for watching, and we will see you soon with another video.